120% on an average, on the average for the Q1 quarter, above 120%, which is our threshold number. We are above that. So the impact is around 10 to 15%. Ballpark number, but definitely we'll be giving certain suggestions to Reserve Bank on that, and let's see what pans out. But definitely, as per this draft circular, there will be definitely some impact on the NIMs and the margins, because some deployment of SLR will have to be made to improve the LCR, and once that deployment has to be done and we have to procure those SLR for this purpose, definitely there will be shrinkage of the margins.
So how do you plan to mitigate that, and how much is your excess SLR?
So presently the excess SLR is around 30 to 35,000 crores. That's a rough number which is there as on 30th June. What we plan to do is let the final RBI guideline come out, then we'll finally strategize how to get it done.
And sir, one more thing on your advances, could you give on this domestic advances, which is roughly around 5 lakh, how much of it would be to private sector?
Private sector?
Priority sector.
No, private sector.
Private sector.
Public
Yes.
sector loans and private sector.
So exact computation we don't have at present, but should be at around 30% should be to central and state government and central and state PSUs. So I think that 70 to 75% should be including RAM sector. See, there is a basic component in this book is 55% of this book is the RAM book, retail, MSME and agriculture. This is all private sector, correct? On a broader way, I can give an explanation. So the remaining 45% which is in the corporate book, out of that 45%, nearly 60% would be to the corporate sector.
Yeah. Hi, Ankur Mishra from ET Now. First of all, congratulations for the quarter. As far as the credit growth is concerned, I observed two outliers. One was personal loan, although the base is very small, and other was vehicle loans. So what is your assessment, particularly in these sectors? How do you foresee the growth in this fiscal year? And also, is there any plan for capital raising which you have in the current year?
Yeah, thank you, Ankur. As regards this personal loan, I think I have already explained in detail about the personal loan. That is the growth which is there, 40% is because of the low base of from 7,000 crores to 10,000 crores, not bigger number is there. On the retail loan side, vehicle loan side also good growth has happened. That has happened because of the lot of tie-ups that we have done with the auto industries and also the dealers. So many number of tie-ups across the country, across the entire geography we have done in all 22, 23 states with all the dealers of various four-wheelers and two-wheelers. From that we are getting good traction and very good traction. And the book is also playing out well. Not much of SMA is also there. So we see a good traction coming in the vehicle loan side, and with the kind of economic growth which is happening overall at the grassroots level, at the tier 2, tier 3 cities level. So there also good traction on the vehicle loan side on four-wheeler and two-wheeler is concerned. So we do not see much of impact and issue as regards to that is concerned. As regards the overall growth is concerned on the credit side, we see that on a YoY basis we will see a growth of around 13 to 14, though we have given a domestic growth of 17% this quarter, but overall it should be at around 14% for FY25 on the domestic book, and overall between 13 to 14% on the global book. That is the number. Presently, if I also give you the number, we have a credit pipeline of nearly 30,000 crores as on date when we speak, with respect to corporate advances, and 10,000 with respect to the retail advances. So 40,000 crore of credit line we are having, where the sanction has happened or it is at various stages of sanction. So which typically is around 6 to 7% of our total global loan book. So we are having very good traction as far as the credit growth is concerned, and lot of opportunities are also available with the kind of economic growth which is happening, and with the GDP growth expected to be at around 7.25%. So 14% kind of credit growth is a very normal credit growth for the industry. Capital raising. Yes, the last point was with respect to capital raising. So as far as our CRAR is concerned, we are adequately placed with respect to our CRAR. We have already taken a board approval. It is there in our presentation also with respect to capital raising of 5,000 crores in this financial year. 2,500 will be through tier 1 bonds, which we would like to do in this quarter itself, in the coming quarter Q2, and tier 2 we would be like to do in the Q3 quarter. So fresh equity raising at present, there is no board approval, and there is no at present there is no our indication also for raising capital through equity. Thank you.
Yes, yes.
I had a question. So how long do you expect this tightness to last, the credit outpacing deposit? Because eventually the money has to come back into the system. And you all have started passing on the higher cost in the form of MCLR. But a large part of your book is repo linked. So will you be increasing your spreads? So during the festival season, do you see rates being higher than what they are, or coming down?
Yeah. So this resources crunch, we think that it will continue to remain in the next 3 to 4 quarters, because we don't see anything coming out of that unless and until the rates start easing out. So repo rate has not been reduced by RBI. They have their concerns with respect to retail inflation. Internationally also, if you see, some rates are rising instead of coming down. Japan has raised the rates. So there is still some uncertainty which is there in the system. Also, global uncertainties are also coming out. Recent events which are happening in Israel and other things. So we definitely feel that there will be some constraint as far as reduction in the rate of interest is concerned on the deposit side. And once the deposit side rates do not come down, definitely the rates for the lending side also will not be able to come down. Because RBI formula on MCLR is very clear that if the cost of deposit gets increased in the previous quarter, then the MCLR goes up in the ensuing quarter. This is how it is there. So there will be some rate pressures. Interest rate will definitely go up on the loan side also. As regards the repo linked loans are there. Again, if the RBI reduces the repo side, definitely the rate will come down. But considering the fact that margin challenges will be there, we will be definitely repricing our loans and increasing the margins over there in order to maintain the NIMs. Thank you.
Thanks, Mayur. Yes. Anybody from this table?
As the risk of repetition, I would like to ask about your ROA guidance. I can see 0.7%, and also ROE if you can provide.
So both of them are linked together, as you are aware. So 0.7 is the actual ROA we have given for June 24, and this number is the same which was there earlier also in June 20, our June 23. So for ROA guidance, we are giving a number of 0.80 for March 25, for the simple reason that the challenges that we are seeing, that is why we are seeing challenges in the form of the RBI circular on LCR which has come, which may also impact the margins finally, and also the resource crunch which is playing out presently in the industry. Keeping all these things in mind, at present we are giving a guidance of 0.80, but definitely this guidance will be subject to review, and maybe once we meet again after the September numbers, we may give a different guidance if some other things pan out.
Are you factoring in for the project finance circular, sir?
Yeah.
And how would you want to look at it from an earnings perspective?
Yeah, project finance circular, at least as you know that it is again a draft guidelines only. So the suggestions we have already sent to RBI directly also and through IBA also. IBA is also sending the joint suggestions to RBI on that also. We have done some ballpark calculations in which the impact will be on CET1. It will not impact the CRAR, but definitely as per guidelines of RBI, it will impact CET1. That impact is at around 10 basis point, not much. As regards the credit cost increase is concerned on the DCCO circular, there the ballpark number impact which is coming is between 10 to 15 basis point for us. So not much of impact is there. So, and we are certain that with the kind of suggestions that we have given to Reserve Bank to moderate it, definitely some moderation should happen, and the impact whatever we are seeing on the ballpark numbers, it should go down further, because it has been represented by all stakeholders like banks, financial institutions, even the corporates, even industry players, infra players also. They have given their suggestions to RBI. Let us see and wait for the final guidance.
Sir, I wanted to ask you on your tax outgo. Could you give throw some light on? It's come down substantially this quarter.
Yeah. So we have shifted to the new tax regime last year in November, in the last calendar year, last financial year, because of which it has come down in this quarter. If you see, when you are comparing on a YoY basis from Q1 of FY24, because of the shift in the tax regime, we have shifted to the new tax regime.
So this will be for all banks, or it's like Bank of India?
No, this is bank to bank actually. We took a management call to shift to the new tax regime in the last financial year. It is that impact.
Okay.
Sir, on your home loan book, we can see that on Q1Q basis, again, growth is around 2.5% only. So, what kind of signs you are seeing from this portfolio?
So yeah, Q1Q sequential basis the growth is the same number as you had said, but YoY basis the growth in double digit in the housing loan book. There I can tell you clearly is that one of the reason for this is the entire home loan book is a repayment book, which is a term loan. There are no ODs or anything in that, overdrafts and other things. So there is lot of repayment also happening in the housing loan book, and obviously with our collection efficiency also going up, repayments are also coming in time. So we are trying to keep pace with new sanctions so that more disbursement and other things happen. But this quarter was a slow quarter as far as the disbursal was concerned in the housing loan because of various reasons like transfers within the bank. Q1 typically it happens. Then there was election. Lot of our officers, entire country were deployed in election duties, and also because of the lot of heat wave and other things during the month of May and June, that also impacted the overall numbers. But now from July onwards, this improvement has started happening in the housing loans. Definitely these numbers will be much better in Q2 than Q1 numbers on the housing loan side.
So, on your insurance subsidiary, that Star Union Daiichi, you are happy with the performance? Because now the FDI limit up to the 74%, there are few foreign players also want to increase their stake. So, are you any kind of in any talks to shed away your stake?
No, presently it's a joint venture between Daiichi, Bank of India and Union Bank of India. So we are invested to the extent of around 28%. So we have taken a management call not to dilute our stake below 26%. That is what we have told the SUD board. So this is what it is. But as far as the overall potential is concerned and the kind of growth insurance is giving, with lot of that insurance penetration happening across the country and lot of investment which is being done by all individuals in insurance, we definitely see huge potential in that. So we are not only selling SUD Life, but as a partner we are also selling insurance policies of LIC. So we have two partners presently, LIC and SUD Life, and we are selling good number of policies under both of them. So we presently see no dilution at least happening in the SUD Life from Bank of India side.
We are looking at an uptick in the valuations going forward.
What is it currently, sir, in terms of
It's around 21 plus 1,000 crores.
embedded value?
That is our value, not the overall value, our shares.
So, on the book value, it's around 1200 crore. Your
Embedded, yes, no, something is right, embedded.
Also, would you like to give some kind of guidance in cost to income ratio? How has been that trajectory?
The cost to income ratio, again, if you see, we have, I would say that it is flat, it's not increasing. So cost to income ratio, we have closed at 51.60 in this quarter, which was 51.73 for the entire financial year. So if you see the last financial year, it has been increased because of the wage revision bipartite settlement which has happened. So whatever the cost was there of the bipartite settlement, that has already been passed in the last financial year, and this quarter it has now come as a part of a salary. So we do not see further much increase as far as the cost to income ratio is concerned. As far as the guidance is concerned, we are giving a guidance of around 51% we will maintain for the financial year 25.
Any more questions? Any more virtual questions? So, thanks Anurag for asking those questions, and I thank our top management, our MD and CEO sir, and all executive directors for this enlightening session with the press. Also, sincere thanks to all of you Despite heavy rains, all of you came and graced this occasion. I request you all to join in for high tea.